What's up, traders? Anthony Crudele here, and thank you for tuning in to the Futures Radio Show podcast. It's Russell Reconstitution week, and this time we're zeroing in on volatility, retail participation, and the growing role of options and how traders position around this annual event. I'm joined by Catherine Yoshimoto from FTSE Russell and Rick Rosenthal from Cboe to break down what makes the Russell 2000 so unique and how the rise of zero-DTE options and technical positioning is shaping the landscape. If you want to understand how traders are preparing for the recon and uncover key insights to help you trade it smarter, this episode's for you. Let's get into it. Today's podcast is sponsored by FTSE Russell. FTSE Russell is the home of the Russell 2000 Index. Did you know that with an 81% share and $1.5 trillion in institutional assets benchmarked, the Russell 2000 is the top choice by far among institutional investors. Like all Russell U.S. indexes, it's rules-based, transparent, and reliable. Regularly updated with the latest IPOs and annually rebalanced. To learn more about FTSE Russell and their products, please go to FTSERussell.com. Catherine, Rick, welcome back to the show.
Thanks for having us.
Thank you, Anthony. It's been a while.
Yeah, it's been a while, and we do this every year. And it's great to have FTSE and Cboe here together talking about the Russell Reconstitution, which happens every year in June. Of course, I'm going to start with Catherine because really they're at the epicenter of this, right, Rick? And we have to start off with define what the Russell Reconstitution is, otherwise known as the Russell Recon, and what happens during this time period every year.
Yes, Russell Reconstitution is currently the annual rebalancing of the Russell U.S. indexes. We did announce earlier in January of 2025 that we will be moving to a semi-annual reconstitution beginning in 2026. But for this year, it's still an annual rebalancing process for the Russell U.S. indexes to make sure that the indexes are reflecting the markets accurately. Because markets changed, it's really important to have a regular cadence of updates to the indexes, a rebalancing schedule, so that any new entrants, IPOs, newly eligible stocks, movements between large cap, small cap are reset. So that is largely the goal of this process, to rebalance the indexes so that they're continuing to accurately reflect the underlying U.S. equity markets.
Let's dive in and talk about this a little bit more because it is different than what happens in the S&P 500 and the Nasdaq. Explain what makes the Russell Reconstitution special and different from other rebalances of the other major indexes.
Yeah, absolutely. And going back to the history and design of the Russell U.S. indexes, Russell U.S. indexes came about from the desire of institutional investors who were clients of Russell Consulting, who designed this index series, to have an accurate, comprehensive, transparent, objectively built benchmark that's easy to follow in its construction. So, going back to those design principles, regular maintenance was an important aspect of this index series, the comprehensive Russell 3000 that covers large cap and small cap. Now, Russell US indexes were the first of their kind, meaning the comprehensive U.S. equity market capture that provides large cap and small cap segmentation. And also, it was float adjusted since the beginning to ensure investability. That was in 1984 that these indexes were launched. In 1987, growth and value indexes were launched, also the first of their kind. So at the end of the day, the goal is to provide representative benchmarks that are accurately reflecting the underlying markets that provide valuable information in terms of the investable universe for the U.S. equity markets. I will also mention that in the beginning, the Russell U.S. indexes were rebalanced quarterly, went to a semi-annual cadence in 1987 in order to reduce turnover, because turnover is not desirable. On the one hand, you want a representative benchmark. If you were to ideally have a truly ideal benchmark, then it would be rebalanced daily, but that's not achievable for most investors. So in the absence of that, there is a balance between the frequency of rebalancing and the representativeness. So again, in 1987, Russell went to a semi-annual rebalance, and then since 1989, it's been an annual rebalance. This is important and has been important for the past several decades in terms of, accurately reflecting on a regular basis the changes because the markets change. This is, again, as you pointed out, different because different from our other indexes that might be out there, because it is transparent. The rules are published to our website. They're objective, and today rules are published for other providers as well. But for example, for S&P, it's still governed by a committee, right? The membership is still, the decisions are still made by a committee versus for the Russell US indexes, it is based on the rules that are published, and it's very easy to follow. The market anticipates this event. There's $10.6 trillion benchmarked to Russell US indexes, and the market is expecting, they know what to expect, right, every year. And so we also provide a long runway in terms of the communication schedule, which this year, rank day was April 30th. We first made our preliminary announcements on May 23rd, and then the reconstitution is final after the close of June 27th. So we provide the market ample notice so they know what to prepare for the rebalancing event.
Yeah, and we're going to go to you now, Rick. And it's a big time occurrence every year for the exchanges because you're going to expect volumes to surge. I'll let you speak on that. But so for Cboe, what products do you guys offer for Russell products? And talk to us about what kind of interest you see from volumes, both institutional and retail during this time.
Sure. So we have a wonderful partnership, long-lasting partnership with FTSE Russell. We have listed on our exchange Russell 1000, 1000 growth, 1000 value, but the crown jewel is really the Russell 2000, which is the most widely followed benchmark used to measure the performance on small caps. Now, what makes this index so interesting is it's representing a market segment that is primarily domestic. In other words, the majority of the revenues generated by this market segment comes from domestic activity. So what will impact this group? Taxes, interest rates, tariffs. So we're seeing all these factors come into play, and it can have and expected to have some impact on the small cap group. Now, Catherine has done a really nice job describing Russell Recon, and it is an important time period that we monitor because there's over $58 trillion in market cap, and you have the Russell 3000, which is encompassing all of the publicly held companies, and then it's segmented Russell 2000, Russell 1000, 1000 being large caps, Russell 2000, the small cap. And if you look at the total market cap of the Russell 2000, it's just under $3 trillion. So you have let's say roughly 2,000 constituents within the Russell 2000. So during the recon period, you have constituents coming into the index and coming out of the index. And so there's a time period where we're monitoring not only what is likely to go in and come out, but the performance of the index, anticipating potential volatility. So volatility is something that we are very focused on. It's something that we monitor. And so market participants, retail and institutional, are looking at opportunities to take advantage of volatility as well as hedge against market volatility.
Is there anything special that Cboe does during this time? Are there any risk adjustments? How much communication are you having with FTSE throughout this process? Anything that the retail and institutional traders need to know about what goes on kind of behind the scenes?
We're fully transparent. There's nothing going on behind the scenes. We have an ongoing dialogue with FTSE Russell just to talk about market quality and market participation. There is an interest in what's happening in the zero-DTE space. This is an area that we've seen tremendous growth in other markets, and we've seen some nice growth within our product, the Russell 2000. Right now, the zero DTE activity is roughly 20% of total volume. And so we do look at that because volatility on a short-term basis is different from the volatility that's widely followed. We have an index called the Russell 2000 Volatility Index, which is tracking the 30-day anticipated volatility in the Russell 2000. So this is an index that's been commonly followed, and this index is compared oftentimes to VIX. So what makes Russell's volatility interesting to market participants is typically higher than VIX. There's more volatility associated with the small caps, which creates some interesting opportunities for those who are looking to harvest volatility. And for those who are looking to harvest volatility, they'll put on certain strategies like vertical spreads or butterflies or condors. And we can have a separate market segment on that alone just to go into a deep dive on these types of strategies. But for those who are dipping their toes into the market, the most common strategy is a covered call or maybe a cash secured put right. So Cboe has created a couple of benchmark indexes tracking a buy right or a 30 delta buy right on the Russell 2000 and a cash secured put right. So we look at volatility, and we're also looking at the performance of these types of strategies during the Russell Recon period. Right now, we're seeing the Russell Volatility Index at approximately 23. On average, it's about 26. Now, to put it in perspective relative to VIX, VIX is currently around 18, so we're looking at about an 8% higher volatility in the Russell than the large caps.
Interesting. Yeah, I mean, I'm glad that you brought that up too. And just to be clear too, when I was talking about behind the scenes, everybody knows I'm talking about just really what's going on in order to make this event happen. It is truly the most transparent event of the year, I think, across all the indexes and the way it's done. And that brings me back to you, Catherine, and talk about the thresholds. What does it take to get into the 1,000 to the 2,000? I'm sure there's a lot of companies that are eager to find out where they're going to be positioned within these indexes. Walk us through that.
Yeah, absolutely. So that is a very closely watched data point, the breakpoint between the Russell 1000 and Russell 2000, the threshold, if you will, between those two indexes in terms of how big a company needs to be in order to join the Russell 1000 or Russell 2000. So this year's breakpoint was $4.6 billion, largely unchanged from last year. And that breakpoint is based on total market cap, so total shares times price. I think there is some confusion out there potentially. I've read some studies where they think that Russell Reconstitution is based on float adjusted market cap ranking, but I want to correct that and say that it is based on total market cap. So the company's size ranking determines, sorting by largest to smallest. It is a very, as we've been talking about, a transparent process in terms of ranking the companies by their size. In terms of the buffers, though, there are buffers between the Russell 1000 and 2000. I mentioned turnover earlier. We want to mitigate turnover. So if there's a company that's on the cusp of that $4.6 billion threshold, we don't want it to be flipping back and forth in terms of membership from reconstitution to reconstitution between the Russell 1000 and Russell 2000. So there is a 5% band based on cumulative market cap percentile around that $4.6 billion breakpoint for this year. Now, what is interesting is it's not a 4.6 billion plus or minus 2.5% off of that number. It's actually, as I mentioned, based on cumulative market cap percentile. So based on that sorting of those companies, you determine where the companies land on the percentile rank. So what is interesting is that the band did expand from last year in terms of, how much wider that band became compared to last year. So what that means is, as of this year, a company had to be bigger than last year. So in terms of the band, around that $4.6 billion, and based on this 5% market cap, cumulative market cap percentile, last year that band, the top of the band for Russell 2000 company that had to be bigger than that band was $7.1 billion. This year, it's 7.4 billion. So the band's higher. So a company as big as $7.4 billion would stay in the Russell 2000 this year. And on the flip side, for the bottom of the Russell 1000, the band was 2.4 billion last year. It's 2 billion this year. So this just reflects the changes in the market, how the markets are dynamic. And also the bottom of the Russell 3000, there is a minimum 30 million market cap requirement to be eligible for the Russell US indexes. But last year, the bottom company was $150 million versus this year's $119 million. So this also just highlights the broadening of the gap between the largest and smallest companies in the Russell 3000. So put it another way, Rick talked about the $58 trillion in market cap of the Russell 3000. The largest 10 companies in the Russell 3000, Russell 1000 grew 16% in market cap compared to last year's reconstitution. Broadly, though, Russell 3000 grew only 10%. So that shows, again, how this widening of the gap is occurring. All those Mag 7 names, most of them continue to keep growing versus, we're seeing smaller entrants toward the bottom. But yeah, then we also have an index called Russell 3000 Extended that includes microcap stocks in it below that $119 million cutoff, but still in the microcap meeting that $30 million minimum.
Got it. Rick, I want to go back to you, and I want to talk about participation between retail and institutional. I mean, we talked about the products that you guys have, and you see volatility typically go up during this time. Volumes, I'm assuming, typically go up during this time. How much of it is divvied up between institutional and retail? And if there's anything that you've noticed, historical trends that happen during this time of Russell Reconstitution?
So with the information that's made available to me is coming from the Options Clearing Corp, and they have three categories: customer, market maker, and firm. Typically, customer volume is about 45% of the daily volume. I would say market maker is probably ballpark 47, 48%. The balance is firm. So within the customer category, you're asking what percentage is institutional versus retail. It's difficult to know. Some of the larger contributing firms that route orders to our exchange have both. We can look at ticket size, the average ticket size, and we can also look at the difference in trading activity in our Russell product versus the mini Russell. We have an options on our Russell 1/10 the size of the notional value of the bigger contract, and it competes directly with the options on the ETF IWM. But I would say in general, the majority of the volume is coming from retail, and our average daily volume in the Russell is over 70,000 contracts per day. And if you look at the notional value of one contract on the big contract, it's 2,100. It's right now the index is 2,100. So take $100 times 2,100 is $210,000 per contract. So notional average daily volume is about $14 billion. And you might be surprised, well, why would you say, for a contract that is worth 210,000, why would you say most of that is coming from retail? Well, surprisingly, retail is very sophisticated, and they're looking at spreading between, let's say, different strikes. So if you have let's say, a long view or short view in the market, you can put on a vertical spread where you're buying one strike and selling another strike. Okay, if you want to be long, you can buy the lower strike call and sell the higher strike call. And then you've got exposure to the long side, and you have limited risk and upside participation. Conversely, you can do the same with puts. So retail is very active, expressing a long or short view, but they're also taking those types of spreads and using those spreads as credit spreads. And they look at what is the probability that the market's going to move up or down more than 2%. So they might be selecting strikes that could be, let's say, 3%, 4% out of the money, and sell those calls, sell those puts, and then buy a higher strike. And this way they can try to harvest volatility, intraday volatility or interday volatility. So during the Russell Recon period, I think what makes it most interesting is the performance of, let's say, a buy right or cash secured put right, because this is a way to kind of harvest the volatility during a period that potentially could be more volatile. But as I've said in the past, FTSE Russell has done an exceptional job managing this process. So over an extended period of time, 6 weeks, 7 weeks, there's an announcement made periodically of which companies are likely to be included in the addition or deletion into the various indexes. So as a result, there really isn't a lot of volatility going into Russell Recon. And over I looked at the last 6 years, on average, as I mentioned, RVX has been over 26, and during the Russell Recon period, with the exception of 2020 and 2022, those were volatile years. Typically, RVX is around 23, so it's lower than normal, and a nice opportunity to harvest volatility.
Yep. And I brought that up because, first off, you're spot on. The retail trader is much more sophisticated than people give credit to. I mean, I talk about the retail trader constantly. I mean, I'm categorized as a retail trader, and I've owned seats on the exchanges. I've been doing this for quite a long time. And you look at how wide of the spectrum the retail trader has gotten. And I think that's super exciting, don't you, Rick and Catherine? And then how much participation you're seeing in retail, especially in a moment like Russell Reconstitution, where it has become more mainstream. Hopefully we've done a lot to help that and to bring more awareness to people. I think that's really such a good thing for our industry, and it shows the growth and how retail has become really a big part of this conversation, which it was not in the past. I mean, let's face it, if we did this years ago, let's say 5+ years ago, retail was not quite as prominent in the conversation, but that has shifted, that has changed. And I'm also glad that you brought up, Rick, that, go ahead.
So I haven't looked at these algorithmic trading systems, but there are services available to retail market participants where they can look at various algorithmic trading strategies, and they can license these strategies and use them for trading options on different markets. Now, that's not dumb money. These systems have been developed by professionals and made available to retail participants that want to license these trading strategies. I'm not promoting that. I'm not saying you shouldn't do it. I'm just saying that the retail market participant has become very sophisticated.
To your point, I would say
Yeah, and that's
the accessibility has increased as well. The options are on Robinhood, for example, or there are these buy right strategies that have become popular in the last couple of years, right, based on the Russell 2000. So I think that there's a plethora of avenues for retail traders to look at and as potential options for their strategies.
Yeah, no, both great points. And going back to the 26 on the Russell Volatility Index versus a 23, I think that is a testament to the transparency of it, right? And it almost dampens volatility because everyone knows what's coming, but we still get the volume, right? And you never know. I think a lot of it is dependent on the year of what's happening, within the marketplace, like you mentioned, Rick. And that brings me to one of the last questions I want to ask you here today, Catherine, is the Russell is not something where we look at a lot of individual stocks. We look at a lot of sectors. Is there any major shift this year in leadership within the sectors as we come into Russell Reconstitution?
Yeah, I think an interesting observation is, in contrast to the last several years where tech was at the forefront, really, it's really more of, especially coming into this year, into 2025, tech's taken a little bit of a backseat, and now it's more about the healthcare companies, financials, industrials, consumer discretionary. So you see a more diversity across the new entrants into the Russell U.S. indexes this year. And then again, going back to your point of why we do this, that is the point of reconstituting the indexes to make sure we're capturing the new opportunities. You think about the past Russell 2000 entrants, that companies that started in the Russell 2000 then later got upgraded to the Russell 1000, like Amazon.com, Netflix, MicroStrategy, Super Microcomputer last year. There are these companies that started in the Russell 2000 and then became big enough to move to the Russell 1000 later on. So we can't forget the importance of capturing this broad market coverage. And to your point about volumes, and transparency, because we provide the market ample notice of what's coming, traders are preparing for the reconstitution day, right? So although we see larger volumes on that day, elevated volumes, we've seen trades across NYSE and Nasdaq above $100 billion over the last several years at the close of Russell Recon. Last year was a record $220 billion traded at the close. It's still a very orderly event. I mean, I hear over and over like how impressed market participants are at how orderly this Russell Reconstitution event, and that will be our goal going into the Semiannual Reconstitution next year as well. That was a very thoughtful process in terms of consulting the market, getting feedback on the right date to pick for the Semiannual Reconstitution. We landed on the second Friday of November. We didn't want to move away from the fourth Friday in June that Russell users have become accustomed to over the last decades. So we've kept that fourth Friday in June as the anchor point for the full Russell Annual Reconstitution, even for 2026. But then we're adding a semi-annual reconstitution second Friday in November next year in 2026. And that's because it gives enough distance from the June reconstitution as well as from the Thanksgiving holiday, which occurs a couple of weeks later.
Yeah, thank you for letting us know about that, and I have no doubt it'll be smooth as the annual one. Rick, I want to go back to you just before we let you go. We only talk once a year. Anything new happening at Cboe? Anything else you want to add to today's conversation with Catherine?
Couple things. 2024 was an interesting year because we've seen a tremendous amount of growth in options-based ETFs. We now see over 640 options-based ETFs collectively managing over 250 billion. So I know that we are focused on individual traders, but we also have 40 Act funds, ETFs and mutual funds that are in the market on a regular basis trading buy rights. It's possible to buy an ETF that is a buy right ETF. Conversely, for those who want to hedge, there are ETFs that will give you exposure to the Russell 2000 with kind of like a structured product, downside protection and upside participation. So whether you want to trade options yourself or whether you want to have a professional do it for you, you can simply allocate to a 40 Act fund. In terms of new product, we recently launched a FTSE Bitcoin Index Futures contract. And perhaps this is something that we can talk about on a different broadcast because this is not related to the Russell Recon, but there is growing interest in Bitcoin, and I'm really happy to share with you that we have a futures product on the FTSE Russell Bitcoin Index, and we're seeing some good activity in that.
No, that's fantastic. Catherine, we'll end with you today. Anything else you want to add to today's conversation with Rick?
I just want to say thank you for having us. It's always a pleasure speaking with you and Rick and talking about the options. I really think it is an important part of the broader ecosystem around the Russell US indexes. And, it helps market participants hedge against volatility and prepare for, events like this.
Yeah, no, I agree. I love seeing what FTSE's doing with Cboe and FTSE's doing at other exchanges. It's an exciting time for the retail trader. Obviously the institutional traders, they're always here and typically they're flourishing. And, this, for our business, this is what it was built on, right? But the retail trader growing and getting more sophisticated, that's exciting for all of us, right? And I think it's exciting also for the institutional traders. They may not talk about it as much, but it is, right? And the mere fact that it's growing at the way that it's growing, at the pace that it's growing, great news for all of us. I can't thank you both enough for your time. It's always a pleasure and honor to spend this time with you talking about Russell Recon. Thank you both very much.
Thank you.